This is Shelley Kraft coming to you live on SNN Live. We're at the Marcum MicroCap Conference 2015 in New York City. I have with me Jim Collins, the portfolio guru. He's a writer, asset manager. Jim, welcome to SNN Live.
Thanks, Shelley. Thanks for having me.
It's good to have you. So what does the portfolio guru do?
I write a newsletter, and I also write for several financial websites. But mainly what I do is I invest money for my clients. We have two strategies. One is income, where we take monthly dividends and reinvest them. And the other strategy is home runs, I would call it, where people are looking for stocks with tremendous returns, albeit with maybe some more risk. That's where we get to the microcaps.
Okay, so I'm not going to ask you any specific recommendations. What I'm more curious about is how do you make your decision as to what's a home run and what's a foul ball?
Yeah, I mean, I think the key is just basic equity analysis. So that would be you look for a market that's growing, you look for a company that's gaining market share in that, you look for a company that has protected intellectual property, usually measured via patents, and you look for a company that has a path toward profitability. It doesn't have to be profitable right away. These are small companies, but you have to have a definite path that I can model out. I do like my spreadsheets.
So let's stay with the baseball model for a minute. You see a lot of fastballs, you see a lot of curveballs, you see a lot of changeups. So in what you just described, what is it that differentiates one from the pack? Because they're all not going to be home runs.
Yeah, I think the key of those four is really the intellectual property and the patents. And that's where you get a company that will grow over time. That's how you find the next Apple. And that's why Apple was such a buy at $10.
What's the weighted value, in your opinion, of judging management and their capabilities as part of that home run?
Yeah, I mean, I think that's huge. I've been doing this for 22 years, so you really get to have a good BS detector, I'll call it. And so that's why I like to come to these conferences, is that one-on-one, I think it's very, very, very much easier to tell what management is doing as opposed to reading a 10K or a 10Q.
So now let's say I'm going to look to hire you as my portfolio manager. What sector would you want me to be heavy in? Which one would you want me to be light in?
At this point, we're really going heavier into the life sciences and looking for companies that have game-changing technologies. Lighter would be things that are, I'll call them headline stocks, S&P 500 stocks, the big boys. So your Facebooks, your Apples, et cetera. I think the money to be made is in the smaller ones.
It sounds to me like you're saying that the big board is overvalued.
Yeah, I mean, we have the S&P 500 today on my numbers trading about 18 times, which is 10 to 20%, depending on how you look at it, overvalued versus history. So if you're looking for an individual stock, you want something that's not correlated, i.e. not a big part of the index or even part of it at all. So I'm looking for companies that have completely game-changing technologies and will move for company-specific reasons, not just with the market, which I think is well overdue for a correction.
Is liquidity part of your decision-making, or doesn't matter? Because you figure a good company one day, the liquidity will catch up with it, the volume will catch up. How do you feel about that?
It is part of the decision. I'm not huge, I'm not Fidelity, but I still have to be able to get my clients in and out. So that's definitely something that I look at in terms of not getting people into something that they couldn't get out of with, let's call it a couple mouse clicks.
Okay, another question is, because I'm always curious. You've got a stock that's, let's say, come off its low, and it's trending higher. I'm getting a little technical right now. And there seems to be a little resistance at a price factor. But what determines whether or not it's going to break through that barrier to resistance, in your opinion?
Yeah, I think that for companies this size especially, it's really event-driven. So that's what I'm always looking for is, okay, we bought this thing at 20, it's gone to 40, but are there milestones? Are there things that will happen in the next 6 to 12 months that would knock it up to 60? And if that is not the case, then, we'll sell it.
When do you sell it?
Hopefully not too late. But, yeah, again, I mean, there's some valuation metrics that I use. I try to buy something. I come up with a fair value before I buy something that has to have, in the microcap space, at least 50% upside. So when those numbers no longer say 50%, then I start to think about selling it.
You're looking at a stock. You have it in the portfolio. What do you consider to be a telltale sign, whether the fundamentals or the technicals are really giving you the readout? What's the telltale sign that puts a buy signal on or a sell signal on for you?
I like to see, especially with the smaller companies, volume. I mean, that tells me something is happening. And then I'll go to the SEC filings and see if that's actually insider volume, which is a double. That's a double bonus, and I love that. But yeah, I think in terms of actually following the charts, really volume is the key for me.
Or insider selling.
Insider selling, and then I'm out of there. So hopefully before the insiders. But
so if you had to give me a general market opinion on the micro-cap market, where do you think we are headed in the balance of the year 2015 into 2016? You want to dust off the crystal ball for me?
Yeah, I mean, I wrote a column yesterday for Real Money where I described it as kind of boring. I think this market is going to trade in a very narrow range, so maybe 5% either way. So if you're looking for returns that are in excess of that, you really need to go into an individual story, because I think just by holding out, it's going to be pretty boring, and it may lag the returns that you get in other securities for once. That has not been the case in the last 5 years, but I think we're entering into that point now.
So what I'm hearing is it's story stock time.
Exactly. You put that very well.
So, Jim, what do you think of the IPO market in microcaps?
I think the best success that we've had for my clients and myself is actually letting things be public for, say, 3 to 6 months, report a quarter or two of financial results, and then buy them. I have at times bought things just on the first day, and I found that not to be the most value-added strategy. Let things season a little bit and then get in there, because almost not inevitably, but almost inevitably, there will be a pullback, and that's when I'd want to get in.
So how does that differentiate from your philosophy on a secondary offering as opposed to an IPO?
Well, I mean, the key on the secondaries is just what the use of the proceeds is. I mean, in some of these companies, it's going to be completely transformational, and I want to be on that right now. Other times, if it's, general corporate purposes, then I would sort of shy away and watch out for dilution, which is always a risk, especially for small companies.
So now let's give out your website to our audience so they can get more information about your newsletter, et cetera.
Sure, glad to. It's www.theportfolioguru.com.
Ladies and gentlemen, I'm standing next to the portfolio guru, Jim Collins. He's a writer, asset manager. I'm Shelley Kraft. This is SNN Live. We're at the Marcum MicroCap Conference 2015 in New York City. Jim, a
Shelley?
pleasure to have you on.
Thank you very much.
You're
Thanks for having
welcome.
me.